Welcome back, and joining me for a closer look of the day's trading session is Caroline Cremen from Adviceworx. Thank you so much for your time, Caroline. I was actually looking at the commodity space and quite interesting moves that we're seeing here, because we're seeing a divergence between the PGMs and the diversifieds versus the gold counters. So we're seeing quite a huge surge coming through in buying activity, coming through to the diversified miners and PGM miners, but actually some selling activity when it comes to the gold counters. What's responsible for the split?
I think it's just really fashion news, and we saw a very, very big run up at the beginning of the year, and then there was a bit of a lag, and now I think the story that, PGMs are in undersupply and probably a little bit cheap has come back to the fore. So I think we're seeing some buying from there, especially considering the fact that the gold miners looked relatively fully priced. So I think you're seeing some comeback there, but it's also, the gold price, on inflation outlook, moving in the wrong direction for people who are holding the commodity. But also there were two big stories, Anglo Gold and Gold Fields, I think it was, looking at selling some of the Australian businesses. So maybe that was also a bit of an overhang on the price there.
Yeah, all right. Well, talking about things being fully priced, seeming that it's not just gold, but also U.S. equities, because we did have comments from Fed Chair Jerome Powell on Tuesday saying that equity prices are fairly highly valued. What impact could that statement have on investors, and really what the Fed's role is in that?
Well, we saw the impact immediately. I mean, the market actually did come off. We've had relatively red sessions over the last few days. But I think he did also give a caveat, and he says, I think I can't remember his exact words, but he said he didn't see that there, it was an issue. It was creating excess risk. I think what they're really trying to do, the Fed, is they're trying to manage expectations. I mean, at this point, the market is still pricing in another 25 basis point cuts throughout the year, and that's lessened slightly since his comments, but it's still the most likely scenario. But I think he's just kind of giving a little bit of wiggle room there for people to say, just don't price those things in yet and make that influence your entry price into equities. And I think it's sound advice, because people forget that. And they're going to forget it regardless of what he says.
Yes, exactly. I mean, just talking about influence, Caroline, what kind of influence could the latest GDP data and labor market data actually have on monetary policy? Because we had this upward revision in GDP in the US, but also the weekly jobless claims actually softening and surprising to the downside amid all these concerns about the labor market. Does this then cool down concerns about the labor market?
Yeah, so the GDP you can kind of only read one way, is that the US economy is very strong. So obviously that leads to worries about, is there still going to be inflation, how persistent inflation, is going to be. The jobs figures you can read, I think, in two different ways. On the one hand, so there's jobless claims are not going up, they're not high. So that would indicate, again, strong economy and maybe a little bit more labor market inflation. But on the other hand, when you kind of come to the end of a very strong labor cycle, and people worry about losing their jobs, they don't jump jobs as fast as ordinarily happens. And what we are seeing is that the US market US economy is not producing jobs to the extent that it was last year. So that's maybe a sign that things are cooling. I mean, it doesn't look like it yet, but it could actually be a leading indicator of that. I don't think it's anything that the Fed hasn't seen and that they didn't take into account when they made their recent decisions. So I doubt it will impact their future decision.
All right. Well, let's get into some of the JSE company news. We did see Barloworld's financial metrics cooling in the 11 months that they gave us a trading update for. We saw that softening from the top line to core profit, even in the Mongolia business, and seeing mixed margin movements there, looking at the different divisions. What's the story that these numbers are telling?
Well, it was interesting that they came out with a statement, because it was an 11-month operational update, not a trading update. So it's like they were trying to actually, get the market ready for what is not going to be a great set of results. So revenue down 10%, I think in South Africa, you saw your industrial equipment down nearly 4%. It would only have been 1.5% if the rand hadn't actually been stronger. So they're not a beneficiary of that, unfortunately. And then, looking at Mongolia, so I think Mongolia was probably a little strange. It came off a very, very high base. They had quite a big order that was delivered. So of course the order book not looking as great as it was last year. But then, the other parts of the business also not looking great. They're down about 2% here, 2%. So just not looking great all in all. And they did take on additional debt of 1.9 billion. And they do say, that they're looking at their debt covenants, but it's never, it's never a great sign. This is clearly a business that's it's just been hit from all different directions at this point. And, they're just going to have to weather the storm. But I think they're preparing us. It's not going to be a great set of results.
Well, a business that had been hit from all sorts of different directions, particularly the gaming landscape, is Tsogo-san. But they actually released something that I would deem as good news. The relocation of the Caledon casino license to Somerset West has been approved. What does this mean exactly?
Yeah. Well, it just means that Somerset West people, you've got a casino that's going to be nice and close to you. I think what is good is that, the Competition Commission and all the other authorities actually do look at these things, and they're relatively practical about where they put these, these casinos and allow these licenses to be operated. And probably Somerset West, which is a high net worth area, you've got Australian close, it's kind of central, close to Stellenbosch as well. So good news for them. It'll be interesting to see what that facility looks like.
Well, Somerset viewers, you've got a casino coming near you. Caroline, let's get to your stock pick for today. Where are you finding opportunity?
Well, I'm going to be quite boring. I'm actually going to be with Microsoft. And Microsoft I haven't bought for a while because I kind of thought it was fully priced. It is one of those stocks that done exceptionally well since 2023 and really one of the outperformers every single year. And you would think that from this point, it can't actually grow a hell of a lot more. But I do think that in reality, it can. It's got a great subscription revenue. All of us who use it for business are subscribers. But also in the development of AI, it's going to be one of the first companies that does actually manage to monetize their AI offering. And of course, Microsoft has got its fingers in all the AI pies where it is necessary. And it's probably going to become indispensable for people. It's just not reached its full potential yet. And I think that the kind of growth that we've had since 2023 is maybe not repeatable, but the growth is still going to be very exceptional from this point onwards. And it's not expensive if you try to put those things into future earnings.
All right, amazing. Thank you so much, Caroline, for your analysis on what has moved our money in today's session. That was Caroline Cremen from Adviceworx.